Typically, fund managers are either growth-oriented or value-oriented. But we're in a market where value stocks have become growth stocks, and traditional growth stocks, which are like, FMCG, etc., they haven't performed. And HDFC Bank is sulking. So the market's kind of turned on its head, hasn't it?
Yeah. What I'll say is this, right? When you look at our organization, it actually allows multiple investing styles to flourish. And we can actually see this because I tend to be much more value conscious. When I say value conscious, what do I really mean? It means that I give greater emphasis to valuations. For me, valuations matter. So even if there is a great company out there doing fantastic things, if it is so well discovered and the valuations are very expensive, I'll stay away from investing in that company, right? Now, someone else, even within my organization, Vasan, who is our CIO, he is probably more growth oriented, and we coexist. Now, with regards to value doing particularly well over the last year or two.
When value stocks rise 300%, then what do they become?
And sometimes this is where this whole distinction between value style and growth style sometimes is a bit superficial and artificial. In the sense that all of us, what are we trying to do? We are trying to find the highest possible growth at the lowest possible valuation with the best possible management quality. So the three pillars when you think about it, right? In an ideal scenario, you want the best of all three parameters, but clearly that is not going to happen. So then within that, you are trying to optimize. So this labeling of stocks as value stocks or as growth stocks also is artificial.
We need to be more nuanced.
Yeah, in the sense that a particular sector might be going through a tough time where it is not showing earnings growth and this can last for even 5, 7, 10 years. That doesn't mean that that sector will never grow going forward. This is what allows for fantastic opportunities. If you look at the power space, which you spoke about, power sector didn't show earnings growth for the last 7, 10 years because there was an overcapacity issue. But in a growing country like India, eventually demand goes up enough that overcapacity gets utilized. Then all of a sudden, you're going to see a huge need for new projects to come into place.
Which is what is happening now.
And so automatically then the earnings growth picks up for companies in this sector.
Okay, so let me ask you this, since you've traditionally been a value conscious stock picker, industrials, defense, PSUs, if you take them one by one just very quickly, which ones do you think have now ceased to be value and which ones do you think still offer something?
So in my opinion, a lot of these sectors actually still have enough earnings tailwinds that I think that there can still be good earnings growth going forward. So even if I don't believe in further valuation re-rating, I can still expect good returns. So for me, power, energy. Now, I'm not saying this because we just launched this energy fund. In fact, we launched this energy fund because we are convinced of this theme, right? We think stocks in these sectors have enough earning tailwind that we can still sort of expect sort of good returns from here on. Having said that, frankly speaking, when I think about the defense theme, it's a fantastic theme where you have nice tailwinds in play. But there, I am struggling with valuations. So someone who cares more about valuations, for me, I'm struggling to understand why do I pay so much. That's where I say there can be great companies doing good things, but if there isn't valuation comfort, I will stay away. So for me, a lot of the companies in the defense team, unfortunately, or fortunately, depending on whether you are invested early on or not, have done so well that the valuations have gone up so much that there is very little margin of safety left.
And what about railway? Every day railway stocks,
so
15%,
railway,
20%.
Again, railways, like many of the railways companies, frankly speaking, I struggle to understand. How does someone justify the valuations of these companies?
Thank you for watching CNBC TV18 and do follow us on all our social media platforms for news, updates and more.